Good morning, everyone, and thank you for joining us today for our webcast entitled Resiliency and Moving Forward Successfully. My name is John Usanio. I'm a partner and practice leader of Citrin Cooperman's not-for-profit industry group. I'd like to welcome all of you to this seminar. Before we begin, and on behalf of Citrin Cooperman, I wanted to extend our sincerest hopes and best wishes that you, your families, and your friends are all staying healthy and safe in these uncertain times. As we've all seen, the effects of the coronavirus have caused drastic economic and business impacts that are sure to have both immediate and long-term consequences. Businesses of all types, whether they be for-profit or not-for-profit, large or small, have all been grappling with the current events and how to best adapt in these unprecedented times. But after months of the COVID-19 virus surging throughout the globe, and extensive social distancing and limitations on public gatherings occurring, there are signs and reports demonstrating that the curve may be, in fact, flattening. Communities, businesses, and the public at large are anxious for the plans to reemerge from this disruption to their personal and professional lives and for a return of some sense of normalcy. The question that remains, though, is whether this notion of a return to normalcy is possible, given the economic devastation that has been caused by the pandemic, namely within the investment markets, record levels of unemployment, overall financial deterioration of both personal and business wealth, and overall general uncertainty that still remains. As the world is seeking to reimagine itself post-coronavirus, nonprofit organizations must continue to effectively demonstrate their vital roles in their communities and to those that are most vulnerable within them. The not-for-profit sector provides so much of what is valuable in our society through its social service acts, arts and culture, recreation, and education. As such, long-term sustainability for these institutions and their programmatic mission is a necessity for many communities. Nonprofit organizations, like all businesses, need to reflect on how they've managed through the crisis thus far and focus on strategic plans and frameworks as they recalibrate themselves for what many would believe will be a new normal. In an effort to assist our clients and communities assess the impact of the pandemic has brought to the sector, our not-for-profit group is tracking the effects within the industry. As such, we invite you to please participate and share with others our not-for-profit COVID-19 Business Impact Survey so that we can have a reflective and representative sample of information and analysis. Our survey should take no more than 5 to 10 minutes to complete, and we anticipate sharing the results with you on future webinars and thought leadership articles. Today's webcast, which is our 5th and final in the COVID-19 series, dives into some of the considerations about moving forward. In particular, our agenda today will focus on some of the latest developments from governmental legislations and enactment, some best practices surrounding post-crisis management, assessing new strategies for finance, including outsourced accounting, and a discussion on overall governance and risk management considerations. This webcast is being recorded for future playback. We encourage you to ask your questions utilizing the Q&A function in the toolbar settings. We have planned for some Q&A towards the end of the webcast, but encourage you to ask your questions and we will try to respond to them as we receive them. And with that, I'd like to turn it over to Mark Sonnenberg, a partner in our Long Island office and the moderator for today's panel. Mark?
Thank you, John, and good morning, everyone. Before we dive into the presentation, I just wanted to spend a few minutes giving a brief update on what's been happening with some of the available government assistance programs and what we've seen out in the news. First and foremost, the Payroll Protection Loan Program. As many of you know, the initial $349 billion that was set aside for these loans was exhausted in just 12 short days. Congress last week approved a $310 billion replenishment of the program, and the president authorized the funding. Organizations were able to apply for this new round of funds beginning this past Monday. We've been informed that the second round of funding did, in fact, get off to a very rocky start. with banks reporting that the Small Business Administration portal crashing after being overwhelmed with demand for applications. If your organization did not make the first round of funding, now would be a good time for you to check in with your banker or your financial institution to see where they stand. It appears to be a first come, first served type situation, and the funds are expected to run out quickly. So we'd strongly recommend that time is of the essence. The other piece of news that came out at the end of last week, the SBA, in consultation with the Department of Treasury, has issued additional guidance for both borrowers and lenders in the form of frequently asked questions over the Payroll Protection Program. Specifically, FAQ number 31 has had a huge impact and created another level of both uncertainty and confusion. FAQ 31 indicates that before an organization submit a PPP application, that all borrowers should review carefully the required certification that you sign on the application, certifying that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Borrowers must make the certification in good faith, taking into account their current business activity and their ability to access other sources of liquidity sufficient to support their ongoing operations in a manner that is not significantly detrimental to the business. Any borrower that has applied for a PPP loan prior to the issuance of this FAQ and repays their loan in full by May 7, 2020, will be deemed by the SBA to have made the requirement certification in good faith. We strongly recommend that if you have any questions regarding whether these provisions apply to your specific PPP application or loan, that you contact your attorney for legal advice pertaining to the application of this FAQ, and you do it as soon as possible to determine how this could potentially impact your organization. Additionally, this week, we were informed that the Treasury Secretary announced that the government will conduct full audits on organizations who've received more than $2 million of SBA loan programs. We want to point out that this is not in the legislation whatsoever at this point, and we don't know if this is actually going to happen. We just think that it leads more credence to the fact that the government is going to take it very seriously for organizations that have received significant monies under this program. Additionally, we wanted to point out the employer payroll tax deferral program, as some further guidance did in fact come out about this program. To summarize, this program allows employers to defer 100% of the employer portion of their payroll taxes. To point out that this is a deferral program, this is not a forgivable type of program as compared to the PPP. This deferral applies to payroll taxes due for the period on the beginning of the CARES Act, which was signed into law in April, and it ends on December 31, 2020. Half of the deferred payroll taxes are due on December 31, 2021, with the other half being due on December 31, 2022. It's important to point out that this provision is not permitted for organizations that have a PPP loan that is in fact forgiven pursuant to 7A loan forgiveness program under the CARES Act. And the last matter that we wanted to point out is the employer retention credit. This is meant for those organizations that did either not apply for a PPP, did not receive funding or under the PPP, or not eligible under the PPP. In general, this employee retention credit, if you have a significant decline in gross receipts in the first quarter of 2020 as compared to 2019, your organization may be eligible for this credit. This credit will be claimed on either your second quarter Form 941, or you can file IRS Form 7200. This credit is taken against the employer's share of federal taxes, and it includes wages and certain healthcare costs up to $10,000 per employee. New information is coming out daily, and everything is evolving at an extremely rapid pace. We would recommend that you speak with your advisor regularly to make sure that you're up to date on the latest information and how it could impact your organization. Additionally, feel free to regularly check the COVID-19 response unit section on our website for the latest available alerts that are being published by our firm. Next slide, please. So with that update, I'd like to briefly introduce our presenters and then roll into the content for this presentation. First and foremost, we have John Yusenio. John is based out of our New York office and is the practice leader of our firm's NFP practice group. Brian Gigante is a partner from our Bethesda, Maryland office and has served the nonprofit industry for more than 40 years. Next, we have Alex Reagan. Alex is a partner from our Braintree office and has served the New England nonprofit community for more than 20 years. And last, we have Jenny Herrera. Jenny is a partner in the firm's nonprofit practice with over 30 years of public accounting experience. Jenny's responsible for a broad range of consulting and management advisory services and serves as both an interim and permanent CFO for various outsourced accounting engagements. Next slide, please. So our first topic today will discuss overall best practices post-crisis management. Now, we certainly understand that even once social distancing measures are lifted, we're certainly not going to be back to business as usual. However, we wanted to discuss some areas that you can start to think about and apply to your organization so that you're positioned to handle the current environment and proactively plan on a go-forward basis. So with that being said, I'd like to direct this first question to John. So John, what is overall a strategic plan for a nonprofit organization?
Thanks, Mark. So strategic planning, also sometimes called business planning in some nonprofits, is really a process that nonprofits use to make decisions to best achieve their goals. While the process has various degrees of formality and may take different form, they're clearly distinct from management activities and intended to really guide and inform key decisions towards some specific organizational aims throughout the year or years, depending on how far the strategy is provided. Organizations use strategic planning to provide some structured process to define success for the organization, maybe to determine operational and programmatic steps to get to that strategy and plan, and to align resources and staff to achieve the goal within a given time frame. Strategic planning generally involves examining organizations' intended impact. I think the impact's important, and it really is there to show what the impact will be, and a rigorous analysis on the organization's internal capabilities to achieve such goals. Looking at full program costs and external environments, or even where sources of revenues come from, will be necessary to yield a successful strategic plan.
Okay, thanks, Sean. So the term sustainability has been thrown out there quite a bit in the current environment, and I'd like to direct this to Alex. So Alex, is the overall term sustainability the same as a strategic plan?
So it's actually not, but the two go hand in hand. Sustainability is part of a strategic plan. As John mentioned, sustainability really is about the delivery of the program and the mission and the outcomes, where strategic, the plan is about how we're going to achieve that. What will we offer for programming? There's different nuances to each. Strategic plan is broader in scope. It takes into account the workforce and the services, the mission delivery. What programs are we going to offer and how are we going to diversify those programs? This is where the strategy comes into play. Whereas, in mission delivery, not all of our programs are going to necessarily run a profit. Mission as a whole is achieved in several different ways. Some programs will operate at a loss. Others will operate at gain and carry those programs that operate at a loss. But together, as a whole, it provides the whole mission of the organization. So I think one of the themes that we've seen over this crisis and this series is that, there's not one answer for non-for-profit. It's for sure that we're all so different. It's a very diverse industry. Every organization, diverse programming and missions and program service delivery. It's really something that's specifically tailored, and it's going to mean a lot of different things to different people. And this recalibration is certainly a tangible example of strategy at play. I think everybody, whether they planned on looking at their strategic plan now, or if they had this in their plan for the future, everybody has been forced to develop a strategic plan in response to the crisis.
Yeah, thanks, Alex. So when you speak about the strategic plan, you mentioned going out into the future. So I guess how far out would you recommend or suggest that an organization project out?
Okay. So I think, again, every organization is different in, stage of life cycle and maturation. I'd say, at a minimum, at least 1 to 2 years out is a good rule of thumb, but it's going to be different for each organization. So, a newer organization is not going to have the luxury of having history to base some of their decisions and planning, on. It's going to be mostly about sustainability. That's going to be a bigger part of their strategy in the beginning. And it might be shorter term goals and action items. A more mature organization obviously has a better infrastructure and process, a system of processes established. So their goals in their strategic plans, this can be much different. They're going to have many more resources to implement that. There might be different time frames and maybe longer projections because of the solid foundation and those resources they have to build upon, and the existing programs that they already have that are going to help these other programs, succeed. So again, it's going to differ for everyone. It's important to know that it's not a set answer. It's something that has to be revisited, recalibrated as necessary, as the organization determines, or recalibrates, redirects its mission, programming, etc.
Yeah, that's a interesting point, Alex. I think, certainly a more mature type organization, one that's been around a little longer, they have a little more history. So when they're looking at their strategic plan and, they kind of have, certainly if they've been around for 10 plus years, they may have, gone through what happened in 2008. So they may have a little better idea in terms of the ups and downs, in terms of the economic environment, which may have, be able to better project out. But I agree with you that it's going to really vary on an organization by organization basis. So overall with that, Alex, I guess, what are some obstacles that you've seen organizations, both large and small, come up with in terms of when they're going through to create a strategic plan?
I think one of the biggest one is just clear vision or clarity, and sometimes inability to reach consensus of what that is. I think that's the beginning part of any strategy. Poor communication and maybe not a committed, dedicated team. Maybe sometimes it lags too long, so it loses momentum. So it's important to have a clear vision of where we're going, precise deadlines that are met, and a dedicated team. Whether it be again, strategy involves the board as well. So that's something to consider in the whole, as far as what that body looks like, the committees that are established to kind of carry it out as well, and keep the momentum going. So that I think is one of the biggest things that we see.
Okay, thanks, Ash. So John, what's your perspective on this with your clients and your experience? What have you seen in terms of obstacles?
I think one of the obstacles that I've seen too is once you set the strategy, actually documenting the strategy, whether it's in some form of written document so that you can assess, have it as a reference guide and a roadmap for for decision making and accountability. Written strategies, are good also for external users, that you might be able to demonstrate to funders and partners how you envision the organization's strategy to move forward. So I think a best practice would be, discussion is great, but having a written format and document of the strategy is a best practice.
All right. Brian, what is your perspective on this? What are some of the obstacles that you've seen?
So one obstacle I've seen is dealing with conflict among people, the team, putting the strategic plan together. I'm not saying conflict is bad, because it actually can foster critical strategic thinking, but the challenge is management to be able to control that conflict and come to a consensus. And I think in that situation, you really need a neutral but effective facilitator to help bring that plan together.
Right. Thank you, Brian. So we're discussing information technology, and this is something certainly that's pretty high in the news right now. So Brian, how critical do you think that IT is within the NFP sector?
Mark, when I think about your question, I don't know how most not-for-profit organizations can or could survive without an adequate IT function. And I believe the last few weeks has proven this observation. Now, I realize from a programmatic basis, IT is not going to serve a meal to the homeless or cure a patient, but it is an essential and critical tool in facilitating these programs and services. IT helps create efficient communications. It can be used to collect data that assists in logistic management and is a cornerstone in all financial functions. Even before the crisis, I believe most not-for-profit executives have seen the value in IT, and I'm proud to see how nonprofits have expanded the use of IT during this time, and really in a very short time. Examples include the increase in virtual meetings to provide services to members and constituents, expanded telephone and internet hotlines to reach out to people in need, and even local churches and synagogues broadcasting services through open platforms such as YouTube. As we come out of this current stay-at-home environment, I would hope that an internal IT assessment and strategic plan be put in place to deal with the future, both near and long term.
All right, thanks, Brian. And are there tools that can assist in developing strategic, basically in developing your strategy and your budget from an IT perspective?
One of the greatest values that not-for-profits bring to the world is their willingness to share information and experiences in either a low or no cost environment. I happen to be in the Washington, D.C. market and know a few organizations such as the American Society of Association Executives, Board Source, and the Greater Washington Society of CPAs understand not-for-profits and have resources available or can point you to where you can find such information. This is great background information and can help you provide a frame of reference in developing your organization, IT strategy, and budget. However, in my opinion, the real solution is to find an experienced service provider to guide you in this process. The right professional can help you identify the work to be done, which would include reviewing software licensing agreements, evaluating the work environments, now both work and at home. You can help provide the employees with the right tools. Is your hardware, is your software correct? And then actually set expectations, not just for the IT systems, but build that into the expectations for staff. A good IT function can help provide support and help communications and provide cybersecurity security considerations.
Thanks, Brian. Yeah, so obviously IT is critical to every organization. A few series back, I think it was part 3, we did a pretty nice presentation on IT where we had one of our specialists from our firm. So if you weren't able to participate in that, we would certainly recommend that you can go back and listen to our replay of that to get some additional information. So moving on now to budget considerations, and I'd like to pose this next question for Alex. So Alex, how does strategic plan and budgeting work together in tandem?
So again, they go hand in hand, which is a recurring theme here. You need to know where you're going before you can, plan what you need to get there. So, it's about, knowing where you want to go and then figuring out what resources you need to get there. So, one of the things that, we're seeing now is, through all this, the recalibration, changing the strategic plan, I've seen some tangible examples out there as far as how people are changing their budgets, how the assumptions in the budgets are changing in relation to how people have to, offer the programs differently. One of the biggest things I think out there is the social distancing. A lot of our nonprofits in their programs depend on volunteer hours. So volunteer time is a heavy component in program service delivery for a lot of our nonprofits. With social distancing, corporate programs that may have given them these volunteer groups, a steady flow of volunteer groups, dwindling because obviously people aren't in the workforce and work corporations aren't organizing these things. nonprofits have had to figure out other ways to get the labor to deliver the program, and that involves usually paying wages. So, for some of the organizations, the new budget, the new strategic plan involves line items on a budget that they never had before, right? So increases in expenses, and how are we going to, get that, pay for that, fund it. That's a consideration. So, the strategic plan sometimes, directly affects what the budget line items were. So it's not always that, you have a strategic plan, it's the same budget you had before and it's just different. Sometimes it actually drastically changes what the budget looks like for line items and what it contains in content. So definitely the strategic plan should align with the budget. You should have both to go with each other for as long as that strategic plan period is.
Great, thanks, Alex. And John, what are your thoughts on this section here?
Well, again, we talked about in past series reforecasting and looking at budgeting assumptions, and I think it's critical in times of crises, but even more critical as you move forward. Obviously, setting budgets is going to be vastly different this year, projecting into next year, than in the past, where assumptions that you may have had historical data for may not be as relevant in your planning stages into the future. Obviously there's going to need to be a very good and robust consideration for any assumptions as it relates to revenues and expenses going forward. And I think that, now is the time to start thinking about what are you looking to do from a strategic standpoint and how you recalibrate your budget in order to accomplish your goals into the future.
Great. Thanks, Sean. So looking at internal controls. So this question's for Brian. Brian, how do you see internal controls changing as a result of the pandemic?
Due to the suddenness of the pandemic created, it's expected that normal controls may have been abandoned out of necessity or practicality. The question many organizations will ask themselves, do I need to go back to the quote unquote old ways? And there's really no easy answer. Now is a good time to reassess what was done under the prior model and your new model to see if now is time for a permanent change. Definitely consult with your auditor advisor. And while this may be a low priority before, it certainly needs to be addressed now. In this situation, the opportunity for fraud has increased. We've seen that with increase in cybersecurity attacks, but even with the people who may be processing these transactions. So, what I would recommend is our firm has given a seminar about fraud in organizations. If you go to our COVID-19 unit, you'll see that we have an upcoming seminar on this.
All right, thanks, Brian. John, did you want to add to this?
Yeah, I just wanted to add on to Brian's considerations on fraud. I mean, it is obviously an important topic, and with all the remote capabilities now, it just brings up more opportunity. And again, I think that as you move forward and reassess your control processes into the future, you need to think about the different controls and mechanisms that you have in place, and whether there's opportunities not only to mitigate fraud, but also to streamline certain areas or certain processes as you move forward. Obviously, it's been a very challenging times from a control standpoint and working from home, but it does give you the opportunity to reflect on what you have in place currently and operationally, and how you may not only achieve efficiencies, but effectiveness into the future.
All right, thank you, John. Next slide, please. So in these times, organizations have been forced to evaluate all aspects of their business, given reductions in gathering and cuts on all levels, programs as such. Unfortunately, some have resulted in furloughs and payroll reductions. This is an opportunity for organizations to recalibrate, reset, and make proactive decisions to assist in the well-being of the organization on a go-forward basis. One critical component for an organization is the evaluation of their accounting functions. There are many different types of ways by which an organization can work as both an outsourced and a co-sourced accounting role. We've seen both full-time and part-time CFOs, and basically it comes down to the types of transactions and the complexities of the specific organization will ultimately determine how much involvement is needed. We've invited Jenny here today to share some of her insights and her experiences in this area. So Jenny, to start the discussion, what are your thoughts about what types of organizations would be an ideal fit to utilize an outsourced CFO function? And conversely, which types of organizations would this not be a good fit for?
Thank you, Mark. Good morning, everyone. Well, generally, organizations will consider outsourcing the position when they are not ready to hire a full-time staff member. This can be due to the level of operations and or budgetary constraints. What we see often is employees being tasked with multiple responsibilities in addition to those of the finance department. This will often result in the person not being fully dedicated to the position, which can lead to mistakes, inefficient processes, and ultimately inaccurate financial reporting. Hiring an outsourced CFO is substantially less expensive than hiring the wrong in-house candidate. Organizations many times struggle to find the right person with the level of experience needed to gain a better control over their finances. An outsourced CFO brings many years of experience in the field and industry and can take over the leadership of the department with minimum disruption. I also want to highlight that an outsourced CFO comes with a firm behind them, a team of industry-trained consultants to help tackle issues as they arise. Outsourcing the CFO position will not be suitable for an organization that has a sophisticated finance department and is ready to have a full-time CFO. When organizations reach this decision, they are aware they will be investing time and resources to insource the position. Throughout my career, I have assisted organizations to insource the position. Generally, I play a team approach with clients. While the organization assesses the candidate fit with the organization's culture, we focus on the skill assessments. Proper industry experience and expertise is very important. The experience of the CFO has to be based on the organization's future goals and not only what it happened historically.
Right. Thank you, Jenny. So based on your experience over the past 2 months in dealing with your clients, what have you seen in terms of challenges that they've seen, and what opportunities have you seen in terms of working with those organizations, accounting, finance departments?
Well, COVID-19 for sure is testing our resilience. I believe a major disruption is an opportunity for the finance department to elevate its strategic profile. Generally, we are in the back office. Finance can play a leading role of the decision-making process by using financial data to tell the story of where the entity should be headed and how various strategic options will affect the organization's financial performance. Too often, finance teams view disruption as something that's pretty scary. Most of the time, the goal is pretty simple: to get through it. Instead of going into survival mode, I would like to challenge everyone to take this opportunity as a change to rethink the process, resources, and tools, and to improve them. Often the barriers that prevent teams from making improvements and or changes, to name a few, are inertia, risk aversion, after all, we're accountants, legacy technology platforms and procedures. During business disruption, the barriers are much lower and people are more open to change because they realize it is unavoidable. And in this case, it is being instigated by an external force. My advice today for controllers and CFOs is to take advantage of the lowest barriers during this time by implementing changes that will help your team emerge after COVID-19 as a new and improved version.
All right, thanks, Jenny. And we've discussed this a little bit at our at the area before this. But how important do you think it is to maintain an effective forecasting and budgeting system?
Well, more than ever, a continuous forecast and an effective budget system have become extremely important to move forward successfully. Financial forecasts are not only good for larger entities, they are essential for all organizations, especially during these unprecedented times. I generally assist my clients with a 13-week rolling cash flow, which is updated on a weekly basis. This tool provides senior management visibility of the cash requirements for the quarter ahead. In addition, forecasts, we must remember, they have to be fluid. They get updated as needed. within the current environment, more flexibility and assumptions for sure are necessary. As the outsourced CFO, I work closely with my counterparts on the program side to make sure the assumptions are realistic and changes are made as needed. In addition of using this tool to assist the organization to assess its existing cash position, I use it to update the year-end projections. If you have an effective system, it will help your organization be ready for the ups and downs, allow for timely corrections, and more important, you will be able to guide your organizations through these extraordinary times.
Thanks, Jenny. So yeah, we'd spoken about in our prior session the importance of a cash flow projection and kind of looking forward. So how does having an outsourced accounting function afford you the scalability to make more quickly informed decisions?
Many of us are feeling right now a combination of fear and frustration when COVID-19 is mentioned. There is a lot happening around us. The threat of a global recession is growing closer. Organizations need to be resilient and adopt a contingency plan to move forward. During the adoption of the contingency plan, many of the clients requested for flexibility and scalability. Surprisingly, the scalability was not only downward. Many clients requested for additional support, especially to assist with compliance and guidance around COVID-19 regulations and available programs such as the update that you gave us, Mark, on the PPP. Below are some examples of what you should consider when ready to take action. Generally, you would assess the potential scenario contingency plan would need to be implemented. Unfortunately, the time is now. Identify the triggers, loss of funding, staff illnesses. If your organization has frontline staff, perhaps a concern is the availability of proper equipment to protect employees and consumers. Formulate a response, cost cutting, look for alternative means, whether financial, staff, suppliers. Communicate. All the stakeholders should be informed of your plan, employees, vendors, the consumers you serve. You won't be over-communicating during this time. Assign responsibilities. You do not have to be the only one responsible for the plan execution. Assign responsibilities of each element and also monitor execution to ensure the plan will be accomplished. Define the timeline. This will ensure decisions are timely made. On the positive side, we must all remember this is a temporary situation. You may discover new opportunities for growth or reorganization, or a different way to deliver your program services. If you take the time to reassess your organization, I believe you will emerge stronger.
Thanks, Jenny. And based on what you've seen with your clients and your experience, how have nonprofits that have outsourced or co-sourced their accounting functions been able to adapt to the virtual environment?
Organizations were not only dealing with the business impact of COVID-19, but the additional challenges of ensuring they remain focused on their mission, serve their constituents, and in some cases to close those programs that require social contact. And at the same time, we had to move the staff to a remote environment. There were many considerations that needed to be addressed in a limited amount of time. Personally, what I did is I assisted clients to determine the work that could be done remotely and the work that needed on-site staff to serve the needs of the organization's constituents. The assessment was required to determine those aspects of the organization's missions that could not be accomplished remotely. During this period, we also set expectations for employees and senior staff members and laid out a schedule, including the on-site staff needed for program support services. During an outsourced engagement, we generally work to improve and streamline processes. We assisted this specific client with the implementation of a cloud-based project management and collaboration tool. When the organization transitioned to a remote environment, it allowed us to continue managing the workload closely, and at the same time, all deadlines continue to be met. As of now, senior management continues to receive timely financial information, no matter how the world changes around us.
Great, thanks, Jenny. And conversely, what were some of the challenges that you've seen in terms of working in an outsourced function, in terms of managing staff while working in a virtual environment?
When we take over the outsourced function, our approach is to take ownership of the finance department and total supervision of the client's accounting staff. As the outsourced CFO, managing the client's staff in a virtual environment has taught me a couple of lessons. I have to continuously remind myself to make communication conscious. The interaction at a distance is less rich than face-to-face communication. I try to take advantage of video meetings whenever possible. Unfortunately, all of us had few days to plan the transition from the office to a remote work environment. During this time, I asked team members to provide with information about their core hours, and I have remained respectful when they are off the clock. I understand that staff members are now more independent, which requires a greater level of proactivity in their part. In other words, communication. Staff need to update managers about work challenges, workload, and their ability to continue meeting deadlines. There is a need of more polished interpersonal skills and a greater degree of empathy to compensate for the lack of physical proximity. Trying to develop a more active approach to management can also help greatly, mentoring a one-to-one. While we live the new normal, perhaps COVID-19 has pushed us towards the future more quickly than anyone ever imagined. It seems as the heads of the finance department, we must take the time to assess our current practices and evaluate what the future would look like for our team and our organizations.
Thanks, Jenny. Yeah, those are some great points. I certainly agree with the fact that communication, empathy, and being understanding of everyone's work schedule is critical for everyone to kind of get through this together when you're working with teams. You know, certainly people have kids and other challenges that they're facing in their personal lives. So I thought that was certainly some valid points.
Yeah, and one of the things that I continue to stress with the team, senior management, at this time, you cannot over communicate. It is very important to lay out expectations and, trying to adapt to the new normal, and also take the opportunity, to lay out and see what the future may look like. This is a great time to make changes.
Great, thanks. And Jenny, the last question I'd like to ask, in working with organizations in an outsource or a co-source function, what kind of tools do you utilize that organizations may not be currently utilizing?
Effective outsourcing accounting requires a significant amount of transition into electronic and cloud-based systems. If an organization has been relied on paper reporting, making the transition to outsource accounting will evolve some of the manual processes. Below are some of the tools we currently use when serving our clients. This list is not inclusive. Expense management application. By adopting an expense management application, organizations are able to streamline the expense reimbursement process. Just close your eyes and imagine the accounting staff no longer tracking paper receipts. By using this tool, we have seen improvements in the review and approval process. Another advantage is the ability to integrate the expense management system with accounting software. Electronic billing system. The application will assist with generating and delivering invoices and accepting payments. This is the case if you use e-billing. An adoption of this tool will streamline the billing and collection process. Again, and this is another software, this is another application that has the ability to integrate with your accounting software. Accounts payable automation software. It will allow for an effective management of the accounts payable of the organization, especially when you are in a decentralized environment, meaning all invoices go to the program managers. By using this tool, the finance department will have control over vendor invoices. Generally, when you adopt this type of tool, you centralize all into one location. These tools allows organizations to streamline the accounts payable function. It also integrates with the accounting software. Close management software, this is one of my favorite tools. It assists to streamline the month-end closes, the month-end close process. The tool allows to centralize the close in one place, assign responsibilities, due date, and status. It provides high visibility at a glance. So you just, with one click, you know where everybody stands within the close process. Moreover, you can identify bottlenecks and resolve them timely. To close, consideration should be given on a cloud-based accounting software. The advantage of a cloud-based accounting software is the myriad of third-party integrations available in the market.
Great. Thanks so much, Jenny. And John, did you want to add one thing to this section before we moved on?
Sure. I think, Jenny, everything you said was great and on point as it relates to cloud-based and external communications. Obviously, it's always necessary in any environment. But one of the things that struck me as you were saying that presentation is that we are, as you have this cloud-based, the ability to generate good data and good tools and reports on a timely basis and have these tools to make financial decisions as you move forward is critical, right? Not just for yourselves and management, but for the board of governance or others in order to make the nimble decisions they often are asked or need to make to set the right priorities for the organization. If you're not in a remote environment or you're unable to generate what these KPIs or other ratios or trends are on a consistent basis, it may challenge you as you try to adapt in this environment, especially in a crisis. So again, looking at IT technology, looking at the ability to co-source or outsource are great options to maintain continuity as you move forward.
You mentioned, John, being very transparent with the board. During these times, we have had on those positions where we, do the co-source or outsource, more frequent board meetings. So there was a need to update the board members on a more frequent basis and provide forecast budget resets more often than we, generally do when everything is, it's normal, if we can say that.
Right.
All right, great. Next slide. This actually leads in very well to our final section, referring to governance and risk management. And I'd like to pose this question first to Brian, which Jenny actually just alluded to. So Brian, what's the role in the board coming out of this crisis?
I think the role of the board is what it should always be. They're the leaders of the organizations. They need to set the tone at the top. They need to work in conjunction with management and staff to set priorities and a plan of action. They don't need to be in the day-to-day management, but they need to set that tone.
Okay. And along those lines, Brian, do you think having a self-evaluation is appropriate for an organization?
I think the board should be evaluated just like anyone else in the organization. I mean, they need to contribute. You need to be strategic in the selection of your board in the first place, and they need to be contributors. Now, I know I've heard over the years, many organizations, some people are very strong and some people are not very strong. It's just like with the organization. You need to have that evaluation, whether it's a self-evaluation or other board members, and you need to keep that board strong because, again, you're setting the tone at the top, and you need to have that communications consistent throughout the organization.
Jenny, what are your thoughts on this, Jenny?
I serve on a couple of boards, and what is really effective is when they have a strong nominating committee. The nominating committee will be intentional with respect to the recruiting of the board members. And the boards that I serve is, the nominating committees were incredibly strong, and we have a very rich board. And what they look at the needs of the organization, might be real estate. So to make sure who's rolling off the board and the expertise that they have to replace with an expert in the area so they can become a high contributor to the organization.
Yeah, what I've seen personally is organizations with boards that work in tandem with management are the ones that are most successful in order to get things done. And if you look at, functions and roles of everyone, management's function is to management and the board's responsibility is to govern. And they both have, things that they're supposed to be doing. At the end of the day, it's for the benefit of the organization. And if everyone looks at it as one big team where the board and management are going to work together, those are the more successful type organizations that we've seen in terms of being able to get things done on a proactive basis. John, do you want to chime in here, John?
Yeah, I 100% agree with everything that was said, and also to add on to what Mark just said is that, again, the role of the board, again, is to set strategies and create policies and procedures on a go-forward basis. So as you start to come out of this crisis and you're looking internally at your policies and procedures and strategy, this is the time to try and recreate or reprioritize and recalibrate what you're looking to do. I think it's important that conversations of board members is engaging and that everyone contributes at the board level. Oftentimes what you find is that you have one or two vocal and more, some that are some passerbys in the process. And really an evaluation and engagement of the board to set the tone at the top is really critical, especially as you try and come out of a crisis. I think it's also important that the strategy that you implement is something that's agreed upon, not just with the board, but with management, as you said, to really drive the tone and the messaging throughout the organizations, through the rank and file, so they recommit to the mission of the organization on a go-forward basis as well.
Great, thanks, John. So this next question I'd like to pose to Alex. So Alex, how do you think nonprofits will reflect on their programmatic mission in light of the pandemic?
So I think it definitely is, it's a matter of reassessment. As John had said, recalibration, not a change in mission, but maybe an expansion of the mission, looking at the mission, looking at the programs. Maybe, this is, again, some people looking at the programs, and some of the programs looking at the impacts, related impacts. Some of the programs are not able to be provided at this time, so maybe those are on hold for the period being, or maybe there's a better program to offer. In addition, there's growth. So, it means something different to everyone. This pandemic has led to some organizations actually being able to use their mission and their programs to actually be relief effort and a resolution to some of the problems we're encountering because of the pandemic. So I think, in all different instances, sustainability is definitely a factor in all of this. And in some strategic plans, sustainability would play a bigger role, in the reassessment. But I think that, as far as the missions are at the core of all we do. It is all about sustainability and continuing.
Yeah, I agree with that. And I think there's even more important is that, this is an opportunity to really reassess your programmatic mission. And if you are heading in the direction that your mission was originally intended for, I think it's important that from a programmatic standpoint, you reassess, especially if you've matured and grown into various different aspects. Are you overextending? Are you still holding true to the core mission that you were originally established for? Or are you expanding your mission? And if you are expanding your mission, are you dedicating the right resources to those programs? Are you delivering those programs at its best capacity? So again, there's opportunities for growth out of this crisis, not just for constriction and reductions of programs, but maybe furtherance of the programs and missions of the organization.
All right, thanks, John. And we just have a few minutes left, but I think it would be important, John, maybe if you can spend a few minutes talking a little bit about enterprise risk management, what it is and how it could benefit organizations.
Sure, thanks, Mark. So enterprise risk management really is a top-down risk approach to organize and recognizing organizational risk that exists and creating a response plan that is able to support not only the boards but the senior executives in carrying out a plan. It's a formalized process that analyzes the risks and benefits across all types of risks at the organization. And more importantly, it's something that needs to be continuously monitored as risks change. ERM really helps to create a risk-aware mindset amongst the staff. It integrates risk considerations to be more of a cultural aspect of what needs to be done. ERM has been around for a while. Think about the risks that an organization faces, and you see the headlines that are across the newspapers. The savings and loan crises, the housing collapse, the Target breaches. More recently, the Shake Shacks and Ruth Chris issues. These are things that have detrimental impacts potentially to organizations, and organizations need to think about not only risk as it relates to financial matters, but also operational. I think we need to understand how reputational risks, operational risks, financial risks all interplay on this matter and into the ERM plan. You know, Alex mentioned before, we talked about strategy a lot during the seminar, but strategy goes hand in hand with carrying out your mission. And ERM, if you were to think about this in a two-pronged circle, you have strategy in one hand, you have ERM in the other, and where it intersects are the strategic risks that your organization is facing. And those risks need to be analyzed, and a plan needs to be made so that you can rank your universe of risk criteria at the organization. Once you rank your risk universe, as they call it, you can start to categorize what is important, what you can tackle immediately, and what needs to be considered to have a plan for. I think what's important as well is that risks change over time. So this does not just become enterprise list management. This is not just a check the box feature as you move forward. This is something that is living and breathing and needs to be considered on an annual basis or even a quarterly basis, because risks such as natural disasters occur, such as pandemics occur. And being able to act nimbly and respond to those risks is really the goal of what an ERM process does. It helps you formalize certain procedures and responses to the process. So again, it's important that you get buy-in from the board. It's important that you get buy-in from management as well as from the organization in order to have a set plan for how to respond. Usually the for-profit world and not-for-profit world dealt with this with cybersecurity and how you react and respond to cybersecurity matters. But this really is just, that is one element of the many risks that not-for-profits can face once you start thinking and outlining the total risk universe for organizations. So as you move forward, that is definitely something I would recommend as a best practice for organizations to consider and try and chart out what its top risks are and how to address them. So with that, I'd like to close out this webinar and seminar. Again, it's been our pleasure to meet with everyone and talk about the COVID-19 impact. As I mentioned, this is the last of our COVID series, but unfortunately, there is still more to come. There is a lot of updates that is continuously being pushed out by the government. I do suggest that you do visit our webpage on COVID-19, as Mark alluded to earlier, for our response unit page, to hear the latest up-to-date news, webcasts, playbacks, and other information as it might relate to tax matters and SBA. And as I mentioned, although this is the final in this series, there's still more to come. We will be hosting more webinars and seminars as more information comes out. We hope that you will be attending that and find that the information and topics are useful and helpful as you proceed into this new normal. I hope that you all have a great day and enjoy and stay safe and healthy in these times. And thank you again for joining us.